So thank you everybody for coming tonight. This is the first in a series of events that we'll be holding called the Open Door Series. Tonight we're going to be covering Everybody Gets It Wrong. So common mistakes that happen owning a home and buying one, as well as uncovering some hidden truths that you may be unaware of. Our esteemed panel tonight consists of Dan Toda, attorney with Durante, Bach & Toda, Louis Guerra with the Louis Guerra Insurance Agency, right here in the other side of the plaza, Mark Akshar of Mark's Inspections, Carol Christensen of Cafe Realty, Derek DeFeo of Better Qualified, and Anthony Negrelli of Movement Mortgage. So without any further ado, we're going to get started. I'm actually going to sweep down this way. Our first speaker is going to be Anthony. I just got to prep you on who Anthony actually is. So Anthony is an experienced loan officer who has knowledge and expertise in helping you explore the financing options available. His main goal is to ensure that you make the right choice for you and your family, and he's committed to providing his customers with mortgage services that exceed their expectations. He's been 15 years in the business and is currently the branch manager of Movement Mortgage located in White Plains? Valhalla, I'm sorry. So close enough, Valhalla, White Plains. So without any further ado, Anthony Negrelli on the mortgage side of home buying and owning.
I got the mic. So yes, I've been in the mortgage business roughly 15 years. I've worked in every aspect of mortgage, from mortgage broker to your financial institutions such as HSBC, Chase. I currently work at a company called Movement Mortgage. We are new to the New York area. I opened up the first branch here in Valhalla. Well, not here in Valhalla, but in Valhalla, January 1st. And we are a direct lender where we we lend our own money as far as a bank is concerned. And then we sell our mortgages to your Fannie Mae or Freddie Mac, Ginnie Mae, direct. So the difference between us and your normal lending is as we sell direct, there are a lot of different aspects of lending where we have no overlays, we have no bank-specific issues with selling loans and getting loans to the closing table. We average close our loans in about 21 days from start to finish, which is a lot different. I don't know if you know this market. Normally they're about 60 days out as far as closings for your other lenders. So those are some of the things that we do. I don't know if you want me to go over some of the misconceptions that lending. So obviously one of the larger misconceptions that we see on a daily basis is down payments. Now, we understand that a seller in this market would say, a borrower or a buyer that has a 20% down payment as opposed to a borrower that has a 3% down payment is a stronger buyer. And, in this day and age, a lot of people are keeping their actual cash in the bank and obtaining mortgages for a smaller down payment. And again, I know it's a scary when you're selling your home and somebody says, well, I'm only going to, on a $500,000 sale, I'm only putting down $15,000. People get nervous. But we see it more and more on a daily basis. And the down payment part of it isn't really the concerning part as far as the bank is concerned. It's more or less income driven in today's market. So obviously, as you know, there is no more stated income product. So you have to show to owe, right? You have to show your income, show your tax returns, and you can obtain a mortgage. So here at Movement Mortgage as well, we underwrite all of our loans up front. So we actually take your buyers, or a buyer for that matter, and we obtain all of their income and assets, and we pull their credit, and we actually underwrite the loan based on a fictitious property, or we call it a TBD, or to be determined. And then based on that, you'll have more buying power when you go to buy your home, you give your real estate agent a loan approval from Movement Mortgage that says we've been underwritten and reviewed, we can afford X amount of dollars. So that was one of the bigger misconceptions. Thank you.
Thanks, Anthony. So again, if there's any questions, you can give him a round of applause. Sure, why not? Woohoo! If there's any questions, actually, if you opened your folders, there should be a pen and a pad in there if you had any questions that you want to ask or take any notes, so please feel free to. Sure. If you're here till the end, which I imagine you will be, you have a chance to meet all the panelists, probably, and their cards, information's in the back. There's going to be raffles and everything else. So, yes, be sure to ask all the questions kind of after we finish the panelists. That way we can kind of get everybody in. All right. Next up, we have Derek DeFeo from Better Qualified. Derek is a native of Yorktown for all of his life, it appears. But since 2010, he's been throughout the real estate industry, and now he's the regional manager for Better Qualified. They cover Westchester, Putnam, and Dutchess County. Let's see here. What else can I say? I don't know what else I can say. No, I can say a bunch of stuff, but Better Qualified has been in business for 10 plus years and has an A+ rating with the Better Business Bureau. They always offer 100% money back guarantee. And Derek has a proven track record of success. His knowledge and compassion for his clients is a guarantee your experience of working with Derek will be a positive one. So without any further ado, Derek DeFeo with Better Qualified and credit discussion.
Good evening, everyone. Thank you for taking time out to come today. Again, I'm Derek with Better Qualified. I'm here to talk to you about credit. As you know, credit is the biggest number in your life now. It's whether it's getting your dream home or landing a new job, your credit's going to be run. And if you have poor credit, none of that's going to happen. So what I'm going to do is talk to a few do's and don'ts regarding your credit so that if you haven't damaged it already, this is how you prevent it. And if you have, we do have the ability of repairing your credit so that it doesn't hurt you in the long run. By a show of hands, I want to take a look at whether it's your debit card or your credit card, who has actually signed the back of your credit card where it says sign here. That's a don't. Because 9 chances out of 10, regardless, even if someone does look at it, they see that it's signed and they're going to run your card. What you want to do is you want to write CID, because what's going to happen is now if you do lose your credit card and you're making, or someone else who's found your credit card goes to make a purchase, it's going to say CID. Obviously, the ID is not going to match. They're not going to be able to make an illegal transaction. So those who do have it, that wrote their name, cross it out and write CID. So that's the number one don't to do. CID. CID, like ask for IDs, CID, not the letter C. Closer. And the next obvious one is don't max out your credit cards. It is a big don't. Some people might max out their credit cards, pay it off. Just don't max out your credit cards, because that increases your more debt ratio, and the higher your debt owed, the lower you're going to see your credit score drop dramatically. And don't bite off more than you could chew. Think you're landing a new job or whatever the case may be. Don't apply for multiple loans, whether it's a car loan, auto loan, credit card loan. Don't try to take off more debt or more loans than you're going to be able to pay back, because if you can't pay them back, you're going to fall late on your payments, and that's going to also negatively affect your credit score. So what I'm going to do is now go over the do's. Regularly monitor your credit. Even if you think you're making payments on time, you're going to want to check your credit score regularly, because you never know if you become a victim of identity theft. So what you want to see is make sure that there's no loans that you have, a loan out of Texas and you live in New York. You want to make sure that type of stuff isn't happening, because again, if you're not monitoring your credit, you're not going to know this. And again, you're going to see your credit score drop. What Better Qualified does is we do offer credit monitoring. And what I'm going to do at the end of this, I'm going to have all of you fill out a form. And what we're going to do is I'm going to do a raffle to pick out someone, and the winner will have identity theft protection for an entire year. And that's credit analysis, credit monitoring. So we'll take care of you for an entire year. So please stay to the end. Stay current on all your accounts. Again, when you fall late or delinquent on payments, they stay on your credit score and they do bring it down. So as long as you stay on top of your credit cards, auto loans, whatever the case may be, as long as you stay on top of it and make your payments on time, you won't have a problem with your credit score. This is another misconception here, is keeping old accounts open. Some people find credit cards that they haven't used in 2 years that aren't expired yet, so what they do is they go ahead and they call and they cancel them. Don't cancel them, because if you cancel them, canceling accounts, open accounts, will actually bring your credit score down. So what you want to do is you want to keep them open. Even if you just go to the store, buy a gallon of milk, or put a couple gallons of gas in your tank, pay that off at the end of the month. Even if it's $5, it shows activity on it. Because also, if you don't make any, or if you don't use any charges on the credit card, your credit card bureau may actually cancel that credit card as well. And when accounts get canceled, whether it's you or them, you will see your credit score drop. So credit cards that are open for 2 years without any activity, go out tonight, buy a drink at the bar, go put some gas in the tank, keep it open, and that will also help your score. And the
Sorry. When you're saying that it's going to bring down your score, how much are we talking?
It varies. It depends on how much credit or how much credit line you have on all your cards already. Because if you have a 2,000 line on your credit score and it cancels out and it brings you have a line of credit from all your credit cards from 10,000 to 8,000, and now your debt ratio could go up 20 to 40%. Again, it depends on your debt to income rate or debt to credit line ratio. So it all depends. But it can be, if you're looking to get a mortgage where, moving mortgage, they take as low as a 650. It brings your score down from, say, a 660 down to a 640. It brings it low enough where now you're not going to get approved for a mortgage. And that's only 20 points, but it depends on what you're looking for. And establish various types of credit. Get an auto loan, get a mortgage, get credit cards, make sure that, and then it shows the bureaus that you're able to make different payments on different types of line of credit. So don't just have a mortgage and that's it. Don't just have one credit card. That's it. Make sure you have various types of credit and just continue making payments on time, and you'll all be good and your credit score will be well. Again, these are your do's and don'ts if you haven't damaged your credit score yet. But what I can do is, and again, because, with a lot of people, credit is a very sensitive subject. So I'm not going to ask personal questions. I'm just, if you do have a more personal question, I will be happy to talk to you at the end of this. If you feel that your credit score has slipped out of your hands because life happens, deaths in the family, divorce, these are things that do hurt people's credit. So there's nothing to be ashamed about, but I'm willing to talk to you at the end of the night, or even leave you my phone number and call me at any time so we could get you on the right track again. Thank you very much.
All right, so next up we have Carol Christensen. Carol is the principal broker owner of Cafe Realty, and she assists clients in buying and selling homes through education and advocacy. Her philosophy is to listen and understand the needs and wants of clients and agents, and to be positive, passionate, and caring. A full-time realtor since 1995, covering northern Westchester and lower Putnam counties, her specialty is in providing experience, knowledge, and diligence as a partner in the sale or purchase of real estate, and she's also a former HGAR Realtor of the Year. So, without further ado, Carol Christensen.
Thank you. I appreciate that. Well, thank you everyone for coming. I really appreciate it. And one of the things that's most important, I'll go on listing a home. For the homeowners to have all the information about their house. What needs to be addressed prior to actually putting the house on the market is if you did your basement, we need the C of O, the certificate of occupancy for your basement. Any repairs for safety, have you done them? Should they be done? And one of the things that we always tell our clients is get a pre-approval, a pre-inspection, that would be Mark. And it's great advice. Know what you have and what has to be repaired before you put the house on the market. So this way, when the inspection actually comes and we do have a deal on your home, you're not in shock of like, oh my God, I need a railing or the roof is falling apart, and you're aware. And being aware is probably one of the most important things, and having knowledge about what's going on in your home. We always go to the town hall records and we verify your taxes. So it's always good to know what your taxes are. We were just with clients the other day who was saying, oh, my taxes are only $18,000. As it turns out, his taxes are not only $18,000. His school taxes are $18,000, but his property taxes are another $5,000. So his taxes are $23,000. So if we just went on his word and listed the house at $18,000, we would be in big trouble. So as realtors, we always go and we verify all the information. A pre-appraisal is always good because, again, you may think your house is worth $1.8 million and it's really worth $1.1 million. And I've had that conversation the other day, and it's not a pretty one. So I would say that, have a pre-appraisal, have a pre-approval, very important. Know also what your principal balance is on your bank, what you owe on your mortgage is very important too. So this way, we could do a net sheet for you of what your actually costs are going to be in selling your home and what you're actually going to end up having and where it's going to be, because there are some hidden costs, there. You're going to have, a New York State transfer tax of 0.4%. So if you sell your house for $400,000, you're going to have to pay New York State $1,600. And a lot of people are unaware of that. But your realtor who's knowledgeable and experienced will inform you of all these things so there's no shocks. Let's see what else. The very importance of being represented by someone who you know, like, and trust. And sometimes you say, well, I'm going to go with that realtor because they've been, they sell, $20 million worth of business. And I can tell you from experience, sometimes you're dealing with that realtor. It's not necessarily the production, what they do, but it's not about the transaction, it's about the transition. We're here to help you get to the next level, to the next place where you want to be in your life, and it's not about the transaction. A lot of times we've told people, maybe it's your best interest to stay in your home. We're just not going to tell you that, yes, I can get you that $1.8 million when I know the house is only worth $1.12 million. So you want to go with someone who knows and understands the market, which is very important. And one other thing I want to bring out is the importance of having a team. When you have a team, you have the right attorney, you have the right inspector, you have the right insurance company, the right person who's doing credit, the right person who's going to give you the mortgage. The importance of having a team, because we all work together to get you to the table, to the closing table. You want to sell or you want to buy, and that's what we're here for, to help you with that. So go with a realtor who has the experience, who's professional and understands the market, which is extremely important. And then I just want to throw out about Zillow and Trulia. Zillow and Trulia is entertainment. That's it, period. Nothing else, nothing more. You could go on to Zillow and Trulia and say, oh, my house is worth $600,000 and it's worth $425,000. Speak to your realtor. We know, we understand, because that house that Zillow has on the market, or Trulia, that they say is worth $600,000, they don't know that the highway is right next door. They don't know, this, that, and the other thing. They haven't seen the inside of the house. So again, thank you for being here, and work as a team with your realtor, whether you're buying or you're selling. Thank you.
Thank you, Carol. Good, no questions. Next, we have Mark Akjar of Mark's Inspections. Mark's Inspections is a reputable home inspection company in Westchester, providing thorough, comprehensive inspections and detailed reports. At Mark's Inspections, they specialize in education to each buyer, and they've been in business for 8 years and have a firm of several inspectors ranging from builders to engineers, and they provide great inspections for every client, every time. So here to talk about inspections is Mark Akjar.
Thank you, Walter. You're very welcome. Good evening. Hey, good evening. My name is Mark Akjar of Mark's Inspections. So after you have your credit evaluated and you get your mortgage and you go out with Carol and you go and you find that home and you get your accepted offer, you would call me. What we do is we do inspections of people's homes. We evaluate people's houses, from top to bottom, looking at everything like the roof, the windows, the doors, the fixtures, faucets, appliances, pretty much everything from top to bottom. We generate a complete report within 48 hours. It gets sent to you via email. From that, you're able to analyze, see, what exactly is wrong with the house. I find that my job is very interesting. A lot of people go through and they like to ask questions about every little thing. So people always ask me, like, when I'm going through the house, like, what do you look for? And I say everything. So it's kind of hard for me to particularly say, what do I look for? But primarily, it's really just, education and comfort, because, for me, it's easy. I go through and I can explain to you about a floor for, 45 minutes, but, people want to know sometimes, okay, what kind of flooring is that? What are the benefits of this? And I find that I tell everybody, make sure you bring a notepad and drink lots of caffeine and be prepared to learn, because there's a lot of information with the home, and it should be more of an educational type process with people.
Louis Guerra. Louis is a Yorktown resident. He lives in Yorktown with his wife, Vicky, and 4 children, 4 grown children, he wanted me to add. Sabrina, Stephen, Gregory, and Gabrielle. He's been in the insurance business for over 20 years. Man, you started when you were young, huh? His agency provides a wide variety of insurance services, including auto, home, business, and life. And his objective is to make sure he brings value to his customers and satisfies their insurance needs. And he provides solutions for all your insurance needs. Louis Guerra.
You did that great. That's wonderful. I didn't know you could, but that's a good job. Thank you, everyone. Just wanted to touch on a few things. Once you go through all this and you get to me, you're going to need insurance. So there's a few things that are misconceptions with a lot of my clients. They're important because they're surprised when these things come up. The first thing is nothing is hidden from the insurance company. If there's any claims or anything in the property, it's going to show up. All of our reports show up. There's nothing. I get a lot of people that tell me certain things and then later on they show up on the report and they're like, oh, I didn't know about that. So just be aware, be conscious of it. If you buy in a home, be aware that in that home, even if you're purchasing, there's a lot of insurance companies that are going to take the claims that are in that home and you're going to inherit them. So you got to be very careful. Not all companies do this, but a lot of companies, and they're starting to do it more and more. So they're starting to ask for clue reports. The clue report would be something that will show you whether there is a claim against that home. So when you buy in the home, make sure that you ask for a clue report before you buy the home so you know what's going on, what's against you. Because what happens a lot of times, somebody buys a home, they call my office. Oh, I want to insure the home. Okay. You know there's 5 claims against your home? What? Yeah, and that's showing against you because now the insurance company is going to give you a higher rate or it may not even insure you. You may have to go to a special risk. So be aware of that. The other thing is claims. Clue report, yes. Claims show up on you a lot of times when you put a claim in, whether the claim is paid for or not paid for, or whether you're at fault or not fault. A lot of companies put this on their report. So let's make believe that you have a watch that you have insured in the policy. And you lose the watch, and now you can't find it. You call the insurance guy, you say, hey, I lost my watch, and it's insured. He says, okay, I'm going to put the claim in. Then the next day you find the watch. You call the insurance guy and you say, I found the watch. I have it here. Don't worry about it. Don't put the claim in. Okay, thank you. Boop. A year later, you go looking for insurance and you find out that watch that you put the claim on is still showing against you in your claim report. So when you put a claim in or when a claim is taken off, make sure you contact the insurance company and say, hey, is that going to be against me or not? Because this wasn't paid, and try to get it removed if you can. But a lot of times that's going to show. So a lot of people put claims in and they don't realize that is still sitting there. So that's the other issue they should be concerned about. The other part is about jewelry coverage. A lot of people say, well, I got personal coverage on personal property on my homeowners. So that would take care of my jewelry. No, a lot of your specialty items, you have to be very confirmed because let's say, yeah, you have personal property coverage, but there's limitations. So if you have jewelry, you're only going to limit the coverage to $2,000 or $3,000. Now your jewelry is worth $20,000, you're only going to get $3,000. So you're better off getting a floater on your policy, and that floater is specifically for your jewelry. You get the information for a jewelry, a professional guy that does the report, and it tells you what the actual value of the jewelry is. And you put that in the insurance company, and then if your jewelry is worth $20,000, that's what you cover for, $20,000. It's also better to get a floater on your policy than to buy a separate policy for the jewelry. Why? Because I have what they call mysterious disappearance. Believe it or not, there's such a thing. And what happens is if you have a separate policy for this jewelry, your mysterious disappearance is not covered. If you have a floater, it is. So those are the things that you need to be aware of. Sewer and drain backup is not included in your homeowners. You have to put as an addition onto your policy. Is a lot of times if you have water problems like a pipe breaks on the wall, or you got a toilet backup, or you got a plumbing that goes bad, or things like that, they're covered by your homeowner's policy. But if you ever get a backup from a drain, or if you have a sub pump that goes bad, that's not covered by your policy. So unless you have a sewer and drainage coverage that normally costs about $50 a year, which is nothing, Most people don't have it in their policies because the insurance agent never tells them. So that's very important. And then the other thing is about your credit score. You got to be very conscious about what you have on your credit score. You check your credit score, make sure what it is before you go looking for the insurance. It's very important that you know what your credit score is because that's going to affect your premium down the road. And everyone is going to know about whatever you have. If you have, even if you're buying an auto and you get into an accident, or if you get an additional driver in the home and it's just a young driver. How many of my clients come to me and say, hey, my child is 16 years old. Can I just put him under me and he drive a car? The problem with that is if you're not there as a driver in the policy and he gets in an accident, that claim could be denied. So there's a lot of things that you need to be aware of. So those are about a few things. There's a lot of stuff I could go on. You could practically write a book about all the stuff that I can go over, but those are a few things that you should be aware of, especially when it comes to homeowners insurance. Thank you.
Next up, we have Dan Toda of Durante, Bach & Toda. Dan is engaged in the representation of individual and commercial clients across several practice areas. He generally handles transactional cases involving real estate finance, business formations and transfers, and landlord and tenant matters. He is also involved with the prosecution, negotiation, and defense of claims arising from these cases. Mr. Toda is responsible for the firm's management and business affairs. Dan Toda.
Thank you. So I'm a lawyer across the street, okay? And probably the most disliked member of the panel. I get it, I know. So let me talk to you first a little bit about my firm in seriousness. I'm a partner at the firm and I handle most of the real estate and the finance matters. My firm has 7 attorneys. We handle a lot of family law, estate planning, civil litigation, real property issues, just about everything. So we see it all and we've unfortunately dealt with it all. So these days we have a number of misconceptions about these real estate transactions, and I think that the biggest one is that it's easy. It's not always easy. These deals these days are like obstacle courses, and we're constantly dealing with things that come up, and we do our best throughout the process to flush out some of these issues early on so we can deal with them. But despite that, things sometimes do come up that we have to deal with through the course of the transaction. So timing would be the first one. I think that's the general misconception these days, and present company accepted. Most banks are doing deals now 60 days, plus minus, easy. There are new laws that went into effect October of 2015, and the industry is still dealing with that. Things are taking longer. These bank applications are generally difficult, and we're seeing the frustration from the buyers and also from the sellers because, of course, it doesn't do anyone any good unless that money is at the table. So that's the first one, the timing. The second one has to do with clearance, because all of these deals, most of these deals, require that you have clean title and you have a legalized property. And when these deals are negotiated, there are certain presumptions that the buyers, sellers, and agents make when they're putting the deal together. We've heard someone say something about as is. Every deal is as is. When an offer is accepted, it's as is, as is. What does that mean? Okay, when it gets to my desk, we have to flush it out because we have to put the actual detailed term in the contract. As is a reference to the physical condition of the home. But, and here's the big but, appliances, mechanical systems, utility systems have to be in working order. The house has to be legalized, and the seller has to have good title to convey at closing. So those things are also based in the customary contract that we use in this area. So as is only goes so far, because without those other items, most buyers don't buy and most sellers don't sell. Of course, especially when there's a bank in the transaction. So what happens? There's a problem. Pick up the phone, call the seller. We have a title problem. We have a building department problem. If I had a penny for every time I heard, I bought the house like that. Doesn't matter. Doesn't matter how you bought the house. Things change. Building departments, procedures change, the laws change. I don't know who represented you when you purchased and how detailed they were and how much due diligence you went through. You could have a finished basement without a CO. You could have a shed. You could have a deck that was added on. You could have an old mortgage that was never paid off. You could have Aunt Sally that never got her interest addressed in an estate proceeding 10 years ago. These things happen. No one knows about them up front. We have to wait for a title report to come in. Hopefully we'll have a realtor that goes to the building department and checks these things in advance. But not all realtors are the same. We have very good ones, and just like every industry, we have poor ones, attorneys, bankers included, okay? So these are things that come up and they have to be dealt with. They cause timing problems. And when people have practical life circumstances that they have to deal with, whether it's moving out of state, maybe buying a different property, maybe it's a school district and getting a child in school before the year starts, these are things that come up that have to be addressed. So you want to make sure you keep your title insurance policy. You want to make sure you go down to the building department, check and understand exactly what you have in your home to deal with things in advance so they don't come up at the worst possible time in a transaction when we have things expiring. So that's something else that you guys should be aware of. The title issues and the municipal issues with the building department, these are things that are complicated these days. They're ever changing, and like everything else in this world, it's more difficult than it used to be, right? So those things are coming up. Lastly, I would tell you that you should be aware of some of the standard contract conditions, okay? We're talking about a condition that a buyer has to obtain a mortgage before they can close the deal, and that perhaps a buyer has to sell their home before they can buy another home, okay? These are conditions that we talk about generally early on in a transaction, but they're difficult, and it's really interesting to flush out the details of what that condition means. Most buyers and sellers think that a deal is conditioned on getting a loan and getting the money to the table, and that's not the case. Buyers have about 30 to 40 days to get a commitment letter from a bank, which is a promise that the bank is going to give them a loan. The condition only relates to that commitment letter. So after that commitment letter is issued, if something happens to that buyer, a job loss, an adverse change of their financial circumstances, that means that they don't get the loan and they also don't get their down payment back. Problem for a buyer, also a problem for a seller, because a seller doesn't want a down payment. A seller wants to sell their house. So that's one thing that you really have to speak to your banker about up front to make sure that once that commitment letter is issued, that the buyer is comfortable in their ability to ultimately get that loan, because they're not protected in the normal contract. The other thing that I'm sure that the realtors can speak to is how difficult it is to negotiate a sale condition in a contract so that a buyer's obligation to purchase is conditioned on their ability to sell their home. We talked about a transition before, selling one property and buying another property. Sale condition is very difficult to get into a contract because it's risky for the seller, and it's not something that all buyers need. So if that's going to be an issue, either to get your loan or to get your purchase, you have to be aware of it up front. You have to deal with it up front so you know what your risks are. Last thing I will just speak to is confidentiality. That is another misconception that's generally glossed over, but it's very important. For any of the realtors in the room, what happens when your seller tells you that the basement is full of mold?
We take out that in the paper.
Follow-up question. What happens when the buyer's agent asks you if there's any mold in the house?
Are we aware of it? You have to disclose it.
They have to disclose it, okay? So you have to be careful what you say to people. And you have to understand that things that you may say that are seemingly harmless may come back and hurt you. When you tell a seller when your rate's expiring, when you tell a buyer that it's really important that you move because of whatever's going on. These are things that can be used throughout the process to negotiate against you. And you have to understand that depending on who you're talking to, you might not be protected by privileged or confidential information. So just something to be aware of. You should be getting a disclosure from your agents up front that tells you who they're working for, who they're representing. If they're not representing you, of course, there are going to be different levels of confidentiality and disclosure requirements and things like that. But know who you're talking to. Be careful what you say, because things that may seem innocent and innocuous and passive at the beginning of a transaction may turn out to be harmful to you later on in the transaction. So just have a general awareness of that. And that's it. Any questions, or I guess we'll just open it up to questions at the end? Okay, thank you.
Can I mention one thing? I just want to mention.
You just want to mention one thing, huh? Okay.
I just thought about when we're thinking about the closing and mortgage and everything else, a lot of more and more mortgage companies are now requesting for you to get your homeowner's insurance before you can get the mortgage, or go into closing, before you go into closing. So a lot of times you're going to run into a situation that the dates are going to change. You may have a closing date a certain day, and then also that day gets changed because the paperwork is not or whatever. And now all of a sudden you got this insurance that you bought that you really don't have the home bought yet, or you haven't moved into the home yet. You haven't gone into closing. So one of the things that we do in my agency, and not all companies do, but so often that we do, is that we can move the date. But most companies are only going to move the date twice. Then the third time, that policy has to get rewritten and everything else. So try to work with your mortgage, if you're purchasing a home with a mortgage broker, and try to get as close to the closing when you're going to do it with a lawyer and everything else, so the date is kind of comes as close as possible. You don't want to pay for a homeowner's policy and then the closing is not until 2 months later, because then you're paying money into a policy that's not really even being used. Okay.
Let's give a round of applause to our panelists.